This second episode of Fantastic Female Fridays. My name is Susan Hayes Cullerton, and today we are going to talk about 3 beliefs holding you back from financial freedom. Well, we are live here from Dublin, and I hope that wherever you are, that you are safe, that you are healthy, that you are well, and that you are happy. And I'm really delighted that you've chosen to spend some of your Friday here with me from wherever you are in the world. I've already had a look there at the chat. We're keeping an eye on that. So I just want to say hello to Anne, hello to Lawrence, hello to Cara, hello to Noreen, hello to Trassa. Many of you, of course, are names that I recognise. And it's really, really wonderful that you're here with us today. So thanks so much indeed for joining us. Okay, so let's get down to business. I want to first of all start off by telling you something that I discovered happening over and over and over again when I was researching for my book, The Savvy Woman's Guide to Financial Freedom. Now, I researched and went on to publish this book in 2013. So what I'm discovering is something that, or what I discovered is something that really and truly I've seen for so long, and it has persisted long after I wrote the book as well. So I wanted to share this with you today. Okay, going to give you a challenge. So imagine that you look into your bank account and you discover that there is an extra €20,000, $20,000, 20,000 of whatever currency you've got. Just going to let that sit there for a while. So you've got 20 grand. How many of you have already started spending it? You see, that's the thing, is that already some people have not just spent it, you've probably even overspent it. And some of you have said, 20,000? Really? I wouldn't be spending any of that. In fact, I'd be saving it, and I'd even be worried that there isn't more there. You see, I fundamentally believe that we all have a financial thermostat. And when we go above that financial thermostat, there's a certain amount of money that we're happy with in our bank account, certain amount. If we go above that, we will spend our way back down. If we go below that, we will save our way back up again. And if you don't believe me, let me put this to you. Did you ever get some extra money at all? Right, let's say it's a bonus, let's say it's a present, let's say it's a once-off gift, let's say you won it on a prize or whatever. And did you ever say, oh, now I'll have to find a way of spending it? See, that's what I'm talking about. That is when your mind can simply go into overdrive and just think about, okay, I need to get rid of this money because I'm uncomfortable with it. So any of you that maybe participated in the Twinterview that VectorVest and I had this week, or you might have seen my video around this, is that where the phrase comes from, money burns a hole in my pocket, means that I'm uncomfortable with holding it. I'm uncomfortable having that money in my pocket and I want to get rid of it. And believe me, that holds you back from financial freedom. That can really and truly hold you back from financial freedom, because then your mind just tries to find ways to get rid of it. I've seen people go out for lunch or go out for dinner, not because they were hungry, but because they simply wanted to get rid of their money. By the way, nobody does this logically. Nobody sits at home and says, I've too much money, I need to get rid of it. That doesn't happen. That doesn't happen. It's subconsciously is when I've so often seen people get money and say, now I have to find a way to spend it. So I'm not here, of course, today to talk about problems. I'm here today to talk to you about solutions. So what can you do in order to overcome this? Well, for a start, actually being aware of this, being understanding that this happens, then that can actually lead to where knowledge is power. When I discovered that this happens, and when I was catching myself, oh, believe me, I have fallen victim to my financial thermostat. Oh, for sure. What I started noticing was that when I heard that voice in my head, almost putting my brain into gear to get me out the door and spending or online with my card or whatever, is that I would, first of all, I would catch it. I would say, is this me now really wanting whatever I'm spending on, or is this my financial thermostat in action? And when you think about it that way, you'll often stop it. And then you'll do something about it, which might actually mean, you know what, maybe I don't want to go out for lunch, or maybe I don't want to do whatever. So that's the first thing I want to say about raising your financial thermostat, is simply knowing that it's aware is a great way to actually handle it. Now, the second thing that I want you to do is I want you to think about this. What are the good things about having more money? Not spending it now, right? We'll talk about spending it in a moment because obviously money is there to be used. I get that, right? I get that. I'm not saying hoard your money for the rest of your life. That's not what I'm saying. But I am just going to ask you, what are the things that you could do or the mindsets that you might have if you simply had more? That's all. Just had it to hold it. Just think about that for a moment. So I'm going to give you some suggestions while you're thinking about this, and I just want you to think with me. So the obvious one, right? The obvious one that comes to mind is, let's say you had an extra $3,000 in your account and it stayed there. Then you probably would have more money for a rainy day fund. Okay, let's say something goes wrong. Let's say that somebody loses a job. Let's say that there's an unexpected emergency. You're going to have more. You're going to have more money. You're going to have more safety and stability. And that's the obvious one. That's kind of a boring one though, isn't it? Because then you have money that you're not spending, and now you have it for something that could go wrong. This sounds fun. Well, can I put the idea to you of a sunny day fund? So what would happen if a really good opportunity came knocking on your door? What about if, for example, a friend of yours texted you and said, because of all that's going on at the moment, there is some really great value available for us to have an overnight trip or a weekend trip to such and such a place. We've got a super duper offer and do you want to go? That is what I call a sunny day fund. This is when unexpectedly good things happen and you've got the money to do them. Let's step it up a notch. Let's say that you have the opportunity to invest in a really good business or a business idea, or let's say that you've been looking at a piece of furniture for the house for ages and then you see it at a knockdown price and you want to go and get it. That to me is a sunny day fund. But people don't talk about sunny day funds. I have a sunny day fund. Oh yes, I do. Just in case good things happen. And you know what else? Is that when you expect good things to happen, they often do. It's law of attraction. So that is what I would also say is, imagine if by simply having more money, simply having it, holding on to it, by simply having it, then you have more choices. You have more safety and more security from a rainy day point of view, but then you also have choices from a sunny day point of view. And you can take spontaneous action where others maybe won't have the opportunity because it's all there. So I just want you to think about that. And I'm only talking about this in the context of preventing that automatic drive for, yeah, I must get rid of it. Well, just all you need to do is just to think about, right, imagine if I had more and held more. What benefit would there be to that? Because we're so programmed, and I completely get it. I've been looking at the Facebook comments on the VectorVest page around this particular episode. I've been watching what people have been talking about. We put a lot of value on spending. We put a lot of enjoyment in spending. I enjoy spending. Who doesn't? But when you actually think about how to imbue holding money, simply having it with a view to spending it at a later stage, just in a more thoughtful, considerate way, it can actually go a long way to managing your financial thermostat. And the third thing I want to say is this, is when you think about what success means to you, and we're going to have another episode where we're just going to solely talk about what financial freedom means and how you can define it, because I've seen a lot of people come up with an idea of financial freedom that doesn't make sense for them or anybody else, and I'm going to help you with that at a future episode. So stick with me. By the way, just for those of you who are new, this week, Fantastic Female Fridays happens every fortnight and on a Friday. And it happens at 12 noon Eastern time. And of course, that is 5 p.m. in Ireland. And that, well, depending on the time change and everything else. But just want to let you know that is the case. We will be here every 2 weeks. And I'm so excited about the show. And I'm brimming with ideas, truly brimming with ideas about what I can bring to you. And also, of course, the impact that you can have for yourself, just with me by your side for half an hour on a Friday every 2 weeks. Now, the picture here that I've put up in front of you is a bullseye, right? This is what we think of when we think of, meeting the target or whatever analogy that you want. The thing is, if your brain is only programmed to go so far, let's say that my financial thermostat is 10,000. Let's say my financial thermostat is 100,000. Doesn't matter what the number is. Let's say that it's 2,000. It doesn't matter what the number is. If my brain and my mindset is simply programmed to go that far. I won't go further. I won't, no matter how hard I try. My brain, my mindset will just hold me there. So when you know that by simply acknowledging that a financial thermostat exists, when you can acknowledge, okay, let me push that higher. Let me just think about how I can push that higher. Then you will be able to accept more. And we've all heard of people who win the lotto and then just basically spend their way back down to where they started. We all know that. Unfortunately, sorry now, I mean, many of you might know me as the positive economist, and I always focus on what you can do, but I never shy away from reality, ever. So I do just want to make the point, some people's financial thermostat is in the negatives. Some people actually can't handle having money, they can only handle having debt. So look, this place, Fantastic Female Fridays, is not a place for judgment. I am simply here to help you to move forward. I'm not going to judge you no matter what, but what I am saying is that it's important for you to recognize that this really does have a very, very strong impact. Now, one last thing before we move on to the second belief, and that is this. You may have to review your financial thermostat several times. When I started my business years ago, when I became an author, when we started bringing in extra people into the company, when various different things like that started happening, I had to review where I was at. I had to review my thinking, and I had to lift my thermostat higher. And now, of course, it also got a bit more volatile, but on the other hand, I had to lift it higher. And sometimes I would see a number in the bank account that I hadn't seen before, in my bank account or in the company's bank account. And I'd just go, okay, Susan, just remember, this is your financial thermostat telling you that it's getting uncomfortable. Now, you can let this happen. You can let the tail wag the dog here, or else you can revisit this. Think about how you want to move forward, like you've always said that you wanted to do. Don't let the thermostat affect you, and just acknowledge it is good to have more in the bank account. I don't need to spend it to get rid of it. I never logically would do that. Subconsciously, I'm not going to let that happen either. Okay, and now let's move on again. And I hope that I will be lifting that thermostat lots more in the future. So the 3 strategies I have are: number 1, acknowledge its power. Okay, number 1, acknowledge its power. Number 2 is write down. You could comment there in the chat box. I'm happy to see it. Write down good things associated with holding on to money solely with the perspective of spending it more consciously at a later stage. That's all. And then the third thing is also just to be aware that you may have to lift it a couple of times. And that's good. That is good. Okay, let's move on to the second belief that I often find holds people back from financial freedom. Is in some cases we have been conditioned to think that people who have got money have got negative connotations. We think of having a lot of money as greed, perhaps, or we think having a lot of money as being unhappy, or all these sorts of things, right? And I just want to deal with that. Some people genuinely feel that if they had more money, bad things would happen to them, or they would turn into bad people. Now, some of you will just be scrunching your eyebrows together and thinking, seriously, people think that? Yes, they do. Some of you will be sheepishly looking at me thinking, am I reading your mind? I'm not reading your mind at all. All I'm doing is telling you what a lot of people think. And through the research that I've done, and that's been secondary research of reports that I've read, but it's also been what we call primary research, which are conversations that I've had with lots of people over the years about this subject. The thing is that a lot of people actually attach negative connotations with money. They're afraid of having it. And you know what the easiest thing is? Let's not deal with the root of that fear. Instead, let's just get rid of the money so I'm never in that position. And you know what's worse? Is that a lot of people actually feel aggrieved that they're not in a position where they have more, and yet they're actively pursuing a path where they wouldn't get it more anyway. So I want to talk to you about that. Now, if I was to put this to you another way, right? Let's take that. Let's like strip that assumption right down to its bare bones. Do you really think that people who have a lot of money do bad things with it, or are bad people, or anything else? I don't. I fundamentally don't. I have met people who have been really wealthy and, I suppose, really poor, I suppose is the way to put this. That's not to say that they've been rich in life or poor in life. That we can have all sorts of conversations like that. But at the heart of it, people who have money aren't necessarily good or bad and we can just put them neatly into a box. It doesn't work like that. So what I'm going to say to you is, imagine that you have more. Or do you really think that you would turn into a bad person? Or do you really think that you do bad things with it? And you know what? And I'm aware, obviously, I'm always aware when I'm preparing for this show and talking to you, I am talking to a female audience. Let me show you this. Is that in the 2018 Global Trends in Giving report, 6,057 donors completed this report. And based on that, the donor community worldwide is made up of primarily women. So 65% of people who donate of varying sizes are women. And they have a liberal ideology, they characterise themselves as religious, they give between $101 to $1,000 annually. They're most likely to support the causes of children and youth, health and wellness, animals and wildlife. That report, by the way, I'll tweet it out for you afterwards, and I'll also put it as a link here into YouTube. You see, the thing is that fundamentally, an awful lot of people who have more do more good with it. They spend locally, they will be conscious consumers. Of course, today we have this huge emphasis now on sustainable giving. They want to help causes like you can see here, of causes of children and of youth and of health and of wellness and of animals and of wildlife. And I mean, we could go on and on. I mean, in fact, the US recently, in a recent report, donates over $400 billion a year. Now, people can't give what they don't have. So the thing is that when you have more, when you actually have more, when you are more financially free, you can do more. You can do more good in the world. And I don't know what doing good in the world means to you. I know what it means to me. And actually part of that is being here with you today. I've always wanted to enable women to be more financially literate, to have more confidence when managing their money, and also to be doing something where they feel empowered, independent of what age and what stage that they were at. That is what it means to me. That is what doing good means to me, among many other things. So in essence, what I want to say here is that when it comes to having more, you aren't just going to get sucked into a vortex of negativity, of doing bad things or becoming a bad person. You see, really, that is a very short-term thinking model that can happen in some people's brain, where they just add 2 and 2 and come up with 5. The thing is that you have a choice. If you have more money, if you become more financially free, if that does happen to you, and by the way, when I say if, an awful lot of that is under a large part of your control, and we'll talk about that over the various episodes in the coming weeks. But what happens then when you get it? You may be subconsciously worried that you will just do bad things or become greedy or whatever. That is your choice. You have got a choice about how to do that. And the thing is, based on global trends, is that actually what happens is a lot more good. You can't give what you don't have. And I'm not just talking about, okay, well, I have more money, so I should give more to charity. That's not my point. My point is that when you have more, you can do more with it, but you have the choice. Don't be held back. Do not be held back from financial freedom by thinking, oh, if I got more, well, then I might turn into greedy like I've seen other people become. That is your brain playing tricks on you. No. You have a choice. You have a choice about what you do. And the reality is that I've looked into this, for example, in Africa. And when you look at various initiatives, when there's, let's say initiatives enabling female empowerment in places like Africa, 90% of the marginal income, so the term marginal means extra, so of extra money that women get, 90% of that they reinvest back into their family. That is what and in comparison, again, this is not a man-bashing show. It never will be. It never ever will be. Men typically tend to reinvest 30 to 40%. That's a UN statistic that was published back in 2012. And again, it's of a part of the world, and it's obviously indicative of a particular demographic and a group of people at a particular stage. But my point is that when women get more money, they tend to reinvest it back into their families. They tend to invest it in the community. They tend to donate. They tend to do good things with it. So do not let a thought process like, oh, maybe bad things will happen, or I'll turn into a bad person, or anything like that will happen. You have a choice. And if the global trends are anything to go by, that choice will have a positive impact in the world. So you have a responsibility simply to pursue more financial freedom. Now, the third one that I want to talk about, the third belief that I find holds people back from financial freedom, is to do with the stock market. We do have an investing gap. And I spoke about that in the last episode. The last episode spoke about 3 ways that women are better investors. to briefly take you through that, the last episode is all the data and everything around it, and I went into it in detail. But the key things that I want to share with you are the key things that emerge from that research. Number one is that women are more likely to get better returns in the stock market. Number two, they're more likely to not overreact. So it's not that they underreact, they don't overreact to the market. And number three is that they're also actually better at pursuing a strategy. The issue is that there's fewer of them in the market. So my objective here with you all, each of these episodes, is not to get more of you investing. My objective is instead to enable more of you to learn about investing and then be empowered to make the choice for yourself, if it's for you or if it's not. But you can't lose anything by simply being more aware of what the stock market is. So what I'm going to do now is I'm going to show you the picture here of the stock. Oh, just going to go over here to going to show you a graph. Now that's better. I'm going to show you a graph here of the stock market, and I went back to 2006, right? So this is, in fact, I went back to the 18th of September 2006. So this graph is from the VectorVest software, and there are amazing things that I can show you with graphs and how to read them and so on, and we'll do that over the weeks and months to come. But I just wanted to show you a picture of this. Many people have the idea that the stock market is only for elite. It's only for people who've got loads and loads and loads of money. Or a lot of people think the stock market is a global casino and that it's just a place that sucks money in and really it doesn't get you anywhere. And some people believe that it is full of risk and should never be gone near. And some people feel, well, I don't have enough to get started in the stock market, so why would I be concerned about that? And actually, I find that a lot. Again, in the secondary and the primary research, I find that a lot, that people say, like, I don't have enough to be concerned about these issues. So whether it might be pensions or investing or various different things. So I'm going to bust all those myths, right? I'm just going to burst through all of those. Okay, let's start from the start. First of all, should everybody invest in the stock market? No way. No, absolutely not. However, it is far from a place that is just for the elite of our society. Is far from it. The stock market is extremely accessible. It means that anybody at all can simply buy a share. Anybody at all. You don't have to. You don't have to be of a certain amount of knowledge. You don't have to be of a certain. There are no terms and conditions except for obviously having the money to invest. Second thing I'm going to talk about is, do I need to have a lot of money to get started? I personally got started in the stock market by buying my first share for €600. And so I would suggest, now that's a long time ago now. So what I would say is that if you have money to the tune of €1,000 or $1,000 to invest, I would say that's enough to get started, right? Again, I'm not advocating that you do. What I am saying is that don't be limited by thinking that you need hundreds of thousands. You don't, okay? A thousand upwards is enough to get started. Now, do you have to have an awful lot of knowledge? I have studied the stock market for quite some time. I'm what we call a CFA. I'm a Chartered Financial Analyst, charter holder. So I have studied the gold standard in exams when it comes to understanding portfolio management. So I'm grateful to say that I have a lot of knowledge around how the stock market works. And I have been with VectorVest since 2011, and I'm very familiar with how their software works. And I have been an investor for the past about 13 or 14 or 15 years. So I've experience. So coming from all of that, do you need a qualification, and do you need lots and lots of resources, and do you need a lot of experience to get started? No, you don't. But what you do need to understand is how the stock market works. Now, last time I mentioned to you that the stock market is simply a supermarket. It is simply a supermarket where instead of going in to buy tea or coffee or groceries or chocolate or washing powder, you're going in to a supermarket, only this time you're buying pieces of companies. That's what a stock is. A stock, a share, an equity, they're all the same thing. They all mean the same thing. A stock, a share, an equity, all mean the same thing. You're buying a piece of a company. And the reason that you would buy a piece of a company is that if it makes profit, it will give some of that to you. Partly in the form of a dividend, if a company gives a dividend, and a dividend is a regular payment made by the company to shareholders, or else If the share price goes up, you can sell it for a higher price. So that is ultimately what the stock market is. So you can, of course, put your money into a bank. And if you put your money into a bank, they may give you interest. As you know, we're in a very low interest rate environment right now. But they may give you interest. And then you would get a certain amount of money in exchange for putting your money on deposit with the bank. Whereas in a stock, it's a higher risk. I am buying a piece of a company and I am hoping that the value of that company will rise and that they will pay out a dividend, and then I will make money as a result. However, let me take on the assumption that some people hold that it's a global casino. All it is a money-making racket whereby most people lose. That's why I put up this graph. This is what the stock market looks like. In the US, this is the S&P 500. S&P, by the way, stands for Standard & Poor, simply the name of a company. But S&P 500 is a list, what we also call an index. It's a list of the largest 500 companies in America. And specifically, I mean listed on the US stock exchange. So I can't set up a company and just list on the stock exchange. You have to be big enough to have people who are willing to buy and sell pieces of your company on a stock exchange in order to be there. So if I was to show you the list of those 500 companies, you'd know most of them. Johnson & Johnson, McDonald's, Coca-Cola, Facebook, Google, etc. Anyway, that's not important. What is important is look at what has happened in the stock market since 2006. And I could stretch that graph wider. I could move in further. I could do whatever. But the point is, imagine or look at what happens is that ultimately the value of those companies has risen significantly over that period of time. And that is what the stock market is that the stock market isn't a casino. It's not a game of poker. When 4 people sit at a table and they play poker, each one of them, let's say, brings $10 with them. There's $40 in the pot. That $40 will be split up and it'll be re-administered back to people depending on the cards that they had and how well they played them. But there's no new money created. None. There's no new money created. $40 came to the table, $40 leaves the table. That's it. The stock market is different. You see, the thing is that companies set up and operate so that they can generate profit. That profit is then redistributed to the people that own the company. They're called shareholders. So therefore, there is new money brought to the table because those companies are producing profits, you'd hope, producing profits and disseminating those out. So ultimately, the value of the stock market over the past 13 years has risen. And particularly, the reason that I went that far was to show you this is including 2 serious shocks. Now, there's been other shocks along the way, but I've included 2008. Look at it. I've included 2008. And I've included the crash that happened as a result of COVID-19. I've included both of those. And all that told, still, the stock market has risen because of what I've just told you is that companies do produce profits and they distribute them across shareholders. Now, therefore, the stock market is not a global casino. If it was a casino, that line would be flat. Just like what would happen at a poker table is when people bring money, people then leave with that money determined by the cards they had and how well they played them. But no new money leaves the room. $40 comes to the table, $40 leaves the table. So therefore, all told, there is no change. There is no change at all. Now, some of you might say to me, yes, Susan, but the thing is that how would you buy? Like, what do you buy? What do you buy? What do you sell? When do you sell? How do you know what to buy? How do you know you're doing it right? Okay, and I know all of that. And that is what we are going to spend. I'm going to build your education on each and every single piece of this over the coming weeks and months. Now, VectorVest do a huge amount of webinars on that whole area around stock analysis and on market timing and on picking individual stocks for different purposes. So if you don't want to wait for me to talk it through with you, that's completely fine. They have lots and lots going on. So you can check out VectorVest.com and check out all of the webcasts that are there, and they will absolutely take you through all of that. Now, the only thing I will say before we leave this part of it is what I would suggest you look at as your homework, right? I'm going to give you some homework between now and 2 weeks' time. And that is, if you simply wanted to buy the entire stock market, you wanted to buy a little bit of all of those 500, but you don't want to buy 500 individual companies. You want one thing, one instrument that would actually enable you to get exposure just to that, there that's right in front of you. Check out what's called an exchange traded fund. I'll be taking you through that in an episode in a couple of months, because I have a lot to talk to you about. But that is how you can turbo boost your education, or check out exchange traded funds. And don't worry, I'll take you through them in a couple of weeks, moving into a couple of months as well, so that we can do that. Now, the last thing that I want to do with you, and then I'm going to go over to your comments, just want to see what you've been saying. What I also want to do is, I acknowledge that the last show, I was showing you the birthday game. And the birthday game at VectorVest is, let's go over here. Let's go over and take a look. I'll show you exactly. Okay. So the birthday game is quite simple. This is where we take the top 20 safest stocks in the database. And when we say safest, we mean the top 20 safest stocks in terms of predictability and consistency of financial performance. That's what it is. So we look for the safest stocks in the US database. And I haven't the time to really delve into all of the things that underpin RS, which is relative safety in VectorVest. Check out the last episode. It's on the channel, VectorVest channel, and you'll find it all there. But I do know, because some of you told me in the comments, what happened was that I showed you the list of the stocks, but I didn't show you the results because my pop-up window didn't appear. So I want to rectify that now. So the birthday game is when I'm going to take my birthday, and you can do the same. If you have access to VectorVest, you can do this. If any of you want access to VectorVest, you can certainly take a trial of the system afterwards. No problem, right? So what I'm going to do here is I'm just going to go to my birthday. I'm going to go to 2015. My birthday is the 15th of April. Okay. Let me see now. 15th of April. Here we go. And I'm going to click OK. So what it's going to do now is going to bring me the safe 20. It is important. The birthday game includes 20 stocks. So 20 stocks on the safest, 20 of the safest stocks in the US. At the time, Nike was in there. Apple was in there, Costco, CVS, Disney. I'm just seeing, I don't reckon, Starbucks, just love coffee, independent of who gives it to me. Okay, so I wouldn't be familiar with a lot of the other companies in here, but that's okay. I don't need to be. So I'm just going to quick test all. Let's see what happens. Yes, fantastic year. Okay, in this case, you can see that of all of the 20 companies, by the way, I would have bought these on my birthday in 2015 and held them. That's it. No more. And the reason I showed you the birthday game is because this really ties in with where women have a brilliant advantage. Making a better return, sticking to a strategy, not overreacting. Birthday game is you buy the top 20 safest stocks in the database on your birthday and hold them. End of. So what happens here now is I'm just going to scroll on down. As you can see there are all the various different companies. 18 of them were winners, 2 of them were losers. One was CVS, was lost by almost 40%, and Cerner Core was down 4.4%. But overall, I would have 94.76% of a return. And as you can see, the market, that's as measured by the S&P 500. Remember what that is? The top largest 500 stocks in America at that time. So we use this to kind of take the pulse of the market. So if I said, how did the US stock market do last year? Rather than asking you to go through every single stock, we just take an index, we take a sample. So as you can see here, over that period of time, the S&P 500 delivered 49.84%, whereas the birthday game delivered 94.76%. And this is excluding dividends. So that return would actually be higher. And I could keep going, and I did. I did certainly over the last over the last episode. But I just wanted to show you that is how you can actually see it. It appears there in your quick test. Okay, so I'm going to sum up. I'm going to give you your homework for the next 2 weeks, and then I'm going to go to the comments and I'm just going to see what you've been saying and see if I can answer any questions. Okay, so first thing I want to say is, number 1 is acknowledge your financial thermostat, right? Acknowledge your financial thermostat. It is doing its thing. It may have prevented you before from financial freedom. That on Friday, the 10th of July, 2020 needs to stop, right? You get in control of how much money you want to have, you want to hold. And you need to imbue the idea of having more money with some positive connotations. If I had more, I could have more of a rainy day fund, but I could also have a sunny day fund. And, you know, I'm not at all against anybody spending money on what they enjoy. But what saddens me is when you give people money and then they say, oh, how do I get rid of it? Enjoy it. Enjoy it. Hold on to it until you want to use it. Number 2 is just dream. Dream about all the good that you would do in the world if you had more. And maybe it's not that you would spend more, but that you might volunteer your time with a charity, or maybe you would spend more time with your kids, or maybe you would invest in you more and you would take on a course, or whatever it might be. Just dream. Journal, dream, think, talk, whatever it might be. And what that does is that will eat away at any negative connotations you have around having more. And then the third thing that I would say is, when it comes to investing, I would really love if you would commit to being part of this show. Come onto this show every 2 weeks and invest that 30 minutes. I know I've gone a little bit over. That's the thing about Irish people. We tend to talk a little bit too much. Anyway, put that half an hour of an investment into you. Just commit to learning about it. Just commit to learning about your financial freedom and how you can pursue it. And I will be covering lots of psychological factors. I'll be covering lots of resources that are available. I'll be giving you the practical tools to move forward. I'll demystify jargon. I'll answer your questions. I'll just be here. I won't judge. I won't know what's going on in your head. I won't judge. I'll simply be here to answer your questions and to guide you along the way. And then the last part I will also say is that if you are interested in perhaps gaining exposure to the stock market, but in a small way to get started, well then I would say check out exchange traded funds. Just have a read around about them, and then when it comes to a little bit later on in the series, you'll have your prep work done. Okay, so that is the homework that I'm going to give you. Of course, the recording of this will obviously be on YouTube, but I'll also be accompanying it with a blog post as well. Okay, so now what I'm going to do is I'm just going to pop over to my desktop over here, and I am going to just going to pop up there. Now I'm going to make sure that you're not hearing me the second time. So let me see now what has been going on over here. Great to see lots of people there in the chat. Hello from Toronto, hello from Orlando, hello from Alberta, Vancouver. Fantastic. Okay, so one question that I got in here. Why don't female investors invest in male founder startups? Well, now what I will say on that, first of all, is I wouldn't have the data to substantiate that statement, but what I will say is that there's a lot of really fantastic female investing vehicles now that are looking at how to facilitate an environment of where more and more women are investing in startups in general, whether they're male or whether they're female. In fact, I see that a number of you are up here. Some of you who actually know are particularly passionate about doing that. So it might be an area actually that we might discuss at some stage on the show as well. Mary says, here we go. Susan always makes us write things down. If you don't write it down, you aren't really accountable. Absolutely, Mary. And further than that, I would also say is that it's really important to document your goals, because when you write them down and you commit them to paper, then it always feels better. And also you can go back and look through them as well. But at the start of the year and at the start of the month, I love the starts of everything. Any of you, by the way, that has realised that if my birthday is the 15th of April, I'm in Aries, you'll also know that I love the starts of everything. It's a common characteristic of people born in April. So I love the starts of things, and I love to document where I'm going, what I'm going to do. And this series, the Fantastic Female Friday series, has been a twinkle in my eye since March of this year, and it's really lovely now to be in episode 2 and all going well. We're well on the way to getting much further as well. Lawrence talks about family time versus bank balance. Yes, Lawrence, at the end of the day, money can buy time back again. Now, I'll tell you one thing as well that somebody said to me one time, is that he said, God, Susan, is a doctor. He's a guy that I went to college with. He said, Susan, do you know what I hope you don't do? I hope you don't spend your wealth. Sorry, I hope you don't spend your health attaining wealth, because then you'll have to spend your wealth getting your health back again. And he's right. This is the thing, is that this show is going to be about being holistic and about being understanding of what really matters to you and how to achieve that. Cara says, can we access the to interview? Absolutely, Cara. It's already on the VectorVest.com blog, so you'll find it right there, but I'll also put a link to it in the chat. Noreen says, do you need a broker? Yes, Noreen. Yes, you do. You do indeed need, and I see, what I love is that a lot of you have started answering that question, and we'll talk about how to actually buy and sell shares at a future episode. Then let me see. I can also see that there's a range of people here who are answering each other's questions, and I can see a lot of international chat here going on, which is super. Cara says your session should be an hour. 30 minutes isn't enough. I'm actually nearly not that far off at this stage, Cara, but really appreciate your feedback and thank you. Lawrence, love the info. Fantastic. Thanks a million. Hello everybody who has been checking in there. Mary says, isn't she amazing? If only we were all as good at giving out information as Susan is. Mary, you're a superstar at that yourself, for sure. Thank you also for sharing the details of my Twitter on Twitter as well. So, LF says, if I selected stock from the VectorVest tool, do I still do the technical analysis? You can absolutely indeed. What I'm going to do is I am going to just pop back into the software for a moment. And what I'm going to do is I'm just going to show you how to get the technical analysis. So I'm just going to go back to, let me just go back over here to 2020. Let me go back to today. Let me just take the safest stock in the database today that VectorVest has, and that's old Dom Freight, okay? And all I need to do here is click on graph selected, okay? And in here, I can add any of the technical analysis parameters that I might be interested in. So personally, I like to look at MACD. I also like to look at support and resistance. And of course, the other one I like to look at, anybody who is familiar with VectorVest will know also I love RT. I think RT is a super, super, super indicator to help you make decisions about short-term transactions. If you're asking me about technical analysis, you probably are somebody that is looking more technically than fundamentally, and then probably more short-term as opposed to long-term. So I am going to wrap up at this stage. I'm going to thank each and every one of you. Thanks so much for the chat and for the interaction that you've all had over the last period of time. Please do keep coming. Obviously, we're going to be keeping an eye on the comments there. Any comments or questions, we'll try to get back to you. The recording of this will always live on YouTube, but we'll also put a blog post together. But please do take your homework seriously and enjoy it. Enjoy it. Financial freedom is to be enjoyed. We'll define it and we will work on so many different aspects over the next couple of weeks and months. And please do help me spread the word and share this with the women and investing, and broadly speaking, women who are interested in financial freedom community. Men are also super welcome. Just warning though, is that I will be looking at this through the eyes of the way in which women look at money and women invest, simply because I want to be there for them. But men are always welcome. And as I say, I'll never be bashing men. I married a lovely one, so therefore I'm quite happy with my lot. So to each and every single one of you, thank you so much for tuning in today. I'm going to see you in 2 weeks' time. The next time we're going to be here again on YouTube, VectorVest.com/FFF. If you want to make sure, register, then you will get the details of the next session. And as I say, we will follow up with you using all of those digital channels. Thanks so much, everybody. Have a wonderful weekend. See you in 2 weeks' time. Do your homework, build your mindset, and reach for the stars.